Good afternoon and welcome to the Cincinnati USA Regional Chambers Leadership Now series. This is a business briefing on the U.S. economic forecast and the business response. This series is truly an extension of our leadership programs and really help you lead through this time. Thank you all for being with us today. A special shout out and thank you to our friends at Fifth Third. We are truly thankful to them for being our presenting sponsor with the Leadership Now webinar platform. Fifth Third is committed to educating and inspiring our business community through this unique time. So thank you again to Fifth Third for being with us and helping us through this virtual time. I'm Amy Thompson, the Leadership Program Senior Director, and I'm glad you joined us today. We hope that truly you've been using the Chamber as a resource through this time. Everything from our daily emails to our resource hub, our restart kits to help you get going back to work. Please let us know how we can help you. We're here for you. As we dive into this session, I'm going to encourage each of you to use the Q&A function. If you have any questions at any point throughout this time for either Rick or Cynthia or myself, feel free to post that in the Q&A. Also use the chat function if you would like to post an article or a link or another resource you think might be helpful to others on this call. We want to make this as interactive as possible. If you have to sign off early, that is not a problem. You can check us out on the website tomorrow as this will be uploaded there for you to review as well. So let's jump in. I am so thrilled to share with you the great panelists that we have here with us today. So a special shout out and thank you to a Vice President and Senior Regional Officer of the Federal Reserve Bank of Cleveland, Rick Douglas. Thank you for being here. And President and CEO of Cobco Enterprises, McDonald's, Cynthia Booth. Cynthia, thank you so much for being with us today. I'm really looking forward to this conversation, and I know that many others on this call are anxious to hear what are those insights, what can we learn as we start thinking about what's the rest of 2020 and 2021 look like? Rick, love to just jump in and have you give us a little bit of an overview before we get started. Really help us understand the role of the Federal Reserve Bank of Cleveland and help us with that context as we dive in today.
Yeah, happy to do so, Amy. First of all, thank you to the Chamber for inviting me to participate. And of course, thanks for everybody who's attending today. So the Federal Reserve Bank of Cleveland is one of 12 district banks, which along with the Board of Governors in Washington, D.C. comprises our nation's central banking system. And Spencer, if you can go to the next slide, please. There you go. Thank you. So we are somewhat unique in the world in that we've got this central bank with a decentralized structure as well as some private and public elements to it. That largely flows from two things. Both of them are related to Americans, what I would consider to be kind of a healthy skepticism about two things, concentrated wealth and centralized power. So before making important policy decisions at the Federal Reserve, we like to hear from our constituents across the country. Spencer, if you can go to the next slide, please. So within our 4th Federal Reserve District, we're also reaching out to all corners to make sure that we're listening to a bunch of different folks. So the 4th Federal Reserve District includes all of the state of Ohio, the westernmost portion of Pennsylvania, eastern Kentucky, and a small portion of West Virginia. So in addition to having our headquarters that you'll see on this map in Cleveland, we also have branch offices in Pittsburgh and Cincinnati. But in addition to that, we also have touch points throughout the district. We have business advisory councils who we meet with regularly. We hold those in Columbus, Dayton, Wheeling, Lexington, Erie, in addition to those that we have at our branches in Pittsburgh and in Cincinnati. So we hear from a lot of different people. Next slide, please. So the Federal Reserve does an awful lot in the economy, and the list seems to grow by the day. But everything that we do is geared really towards fostering a sound financial system and a healthy growing economy. We've been tasked by Congress with providing some bank supervision and regulation, make sure that banks don't take on too much risk. We are the banker to banks and the federal government, I should say, ensuring that financial transactions, whether they're made in cash, check, or electronically, get through. And of course, there's the monetary policy piece of it, which is balancing the supply of money with the needs of the economy. But lately, we've been forced to dig a little deeper into our toolkit to make sure that we're dealing effectively with the current crisis. So one thing that we're doing a whole lot of more of these days is talking to people. So I'm really hoping that we can keep this conversation going today.
Rick, thank you so much. It's very helpful to have just an overview. And I also know, certainly in different times, but I know that education is really important. I know you've done a number of programs where you have kids in different school groups that will come and actually tour the facility, and they love going down into the vault and seeing the money. And so what you're doing to both educate at all levels and really provide resources, truly, truly helpful.
Thank you.
I'd love to just jump in. I know everyone is really anxious to understand really what's happening as we think about the economy. If you could provide some context for us, COVID-19 has dramatically had an impact on our economy. Can you really walk us through and help us understand what has that impact been?
Yeah, happy to do so. If we could go to the next slide, please, Spencer. So when we started running into the difficulties with the COVID outbreak in the United States, one of the most immediate impacts was felt in financial markets. It really started around February, it eased a little bit. And then once we got into March, and particularly mid-March, we saw a rather sudden and significant drop off in equity value. So for example, this graph shows the S&P 500, and during the period between March and April, we saw a decline in the S&P 500 of about 34%. We have regained some of that value since then, but we're still about 15% off from where we were when the S&P 500 reached a record high in February. Now, if you compare that back for historical context, you look at what we saw in the financial crisis during 2007-2009 period, the S&P 500 was off about 55% before it started the what we now see as the longest bull market run in U.S. history. Of course, declining asset values are a big deal for our economy because they can have a big adverse impact on real economic outcomes because of the impact that they can have on households' balance sheets. So again, for example, if you go back to the recovery from the recession in 2007, 2009, one of the big reasons that the recovery was so slow was because household balance sheets had been decimated by the decline in equity values as well as the declining values of their homes. Because of that, consumers were constrained going forward, and we didn't see the same kind of bounce back that we would typically see in there. If you could forward the slide, please, Spencer. So accompanying that decline in the equity values, we also saw a sharp increase in volatility, in risk aversion. So this is the Chicago Board Options Exchange Volatility Index, or what we call the VIX index. This is often referred to as the Investor Confidence Index. When the numbers are low, it's referred to as the Investor Fear Index. When it's high, if you could back up one, please, Spencer. In April, as you can see from this graphic, we reached levels of let's say anxiety in financial markets that were even higher than what we saw during the Great Recession. That tells us that investors are basically bracing for a very bumpy month ahead. It's also a reflection of heightened risk aversion and uncertainty in the economy. And at the end of the day, you know, when firms are nervous, they're uncertain. they will adopt a cash conserving posture by pulling back on things like capital spending and hiring plans. And then that has a real impact on economic activity. Next slide, please, Spencer. And we are just now seeing the front edge of the damage being reflected in the data. So this graphic shows us real gross domestic product, which is total output of goods and services in the US, and it's juxtaposed against real final sales to domestic purchasers, the dashed line here, and that is real spending by economic actors located within the geographic bounds of the United States. And it's ugly out there. I mean, as of the most recent data, it looks like gross domestic product fell about 5% in the first quarter. And that is significant in its own right, but it's even more startling when you consider that right up through mid-March, most of the business contacts I have were telling me the business was relatively solid. It wasn't robust by any stretch of the imagination, but it was solid. So most tracking forecasts had GDP growth coming in at about 2% for the first quarter. That would have been the fourth straight quarter where we saw growth right around that 2% range. But then the second half of March is when we saw these big declines, and we saw GDP plunge by about 5%. In fact, only when we take a look at expenditures, which again is the dashed line, it fell even further. Only 2 of the expenditure categories actually increased in the first quarter. One of them was the government. The other was residential investment. So houses, any houses that were either started or closed on, those deals went through, so it continued to rise. That's unlikely to be replicated in the second quarter. Next slide, please, Spencer. So the GDP numbers give us kind of a sense of the magnitude of the decline. And by the way, we're expecting unprecedented declines in output in the second quarter. But it's also important to note that while we saw kind of broad-based declines in expenditure categories, we're also hearing of broad-based declines across businesses. So while that GDP and those expenditure numbers give us a sense of the magnitude, things like this ISM Purchasing Managers Index, they give us a measure of the spread. So this is a diffusion index, and it gives us a measure of the spread of the damage. And here again, you can clearly see that both when it comes to both manufacturing and non-manufacturing industries, that we saw significant declines in activity in the latest reading in April, the lowest that we've seen since the Great Recession. It would not surprise me if those numbers went even lower in May, and we actually went below what we saw during that. Here again, very broad-based declines. In fact, on the manufacturing side, there were only 2 real segments that showed any type of an increase. That was in food manufacturing, food, beverage, and tobacco, and paper products. So we've all been out trying to buy toilet paper, right? So they've increased production on that end. On the services side, it's basically been financial services have seen somewhat of an increase, and the public sector has seen somewhat of an increase. But outside of that, everything is pretty much down. So it's a tough tale to tell. Next slide, please, Spencer. And the breadth of that impact can also be seen in the labor markets. Where in the economy, virtually every segment in the economy shed jobs. During the month of April, employment plunged by more than 20 million jobs in April. That is a remarkable number. To give you a little bit of context here, during the course of the Great Recession, we lost a total of about 8.5 to 9 million jobs. And that took about a year and a half to achieve that. So we lost 20 million jobs just in April alone. And again, while the job losses were broad-based, a couple industries are seeing exactly what you would expect. So leisure and hospitality jobs, for example, leisure and hospitality shed more than 7 million jobs in April. Again, about 8.5, 9 million jobs total were lost during the Great Recession. In April alone, we lost more than 7 million jobs in leisure and hospitality. But again, Job loss is widespread. With that, we've seen the unemployment rate rise to the highest it's been since the Great Recession. And the official unemployment rate at 14.7% was actually held down a little bit because we saw a lot of people leave the labor force in the month of April. This may be some people who are sitting out waiting for their prior jobs to come back. But if the unemployment rate remains high and if labor demand doesn't come back, you're going to see the unemployment rate rise even further. So at the end of the day, I mean, this COVID-19 pandemic has been a devastation in terms of losses to both lives and to livelihoods.
Rick, thank you so much for walking through this data. Granted, I'd like you to be sharing happier news with us. However, it truly is helpful to see a bit of that backdrop, as well as really some comparisons to historical data and knowledge. And really, I'd love to shift our conversation to think about these graphs and data, but how are they playing out real time? And we're thrilled that Cynthia Booth is here with us today to really help us understand how is this impacting your business and the folks that you are working with on a day-to-day, Cynthia. So Cynthia, as the CEO and overseeing 6 different McDonald's locations right here in Greater Cincinnati, I'd love for you to just kind of walk us through some of that data you just saw, but tell us in real time, how is that impacting you, your team, and your business?
Today, I really appreciate the opportunity to just be part of this conversation. So none of us would have expected just a few months ago that we would be faced as business owners with the challenges that we've been faced with, particularly specifically to my business, which is obviously the restaurant business. For us to be told within a week's notice by the governor that we had to close our front doors was an opportunity for us to all step back, my team, to just think about what's next. So we had to lock our doors so that our customers could not come through the restaurants, that we could only service them actually through the drive-through and through delivery. So all the customers that we would normally see during the course of a business day, people coming through for breakfast, people on their way to work, people stopping into our restaurants for lunch, all of that went away. So now what do we do? So based on the statistics that Rick just shared, all of the implications that he shared regarding what happened to the economy happened to our business. So what does that mean? So we had to quickly think about how do we now service our customers when a large portion of our access to our restaurants was taken away. It allowed us to it required us to really step back and say, this is a virus that actually can affect anyone. So our customers, our first responders, and obviously we saw the statistics. So this is what we had to do. We had to really think differently. We had to pivot quickly, and we had to understand how we could serve our guests through the drive-through and also through delivery. The good news is that we did have those 2 options. Had we not had those options, we question what would we have done? The doors would have been closed. There would have been no drive-through. There would have been no delivery. The good news is that we had 2 options to rely on. Our sales have been impacted when a large portion of your business has been shut off. So we've had to really think hard about how we were going to come out of this. We actually did some staffing realignments. We had to deal with the fact that in our restaurants, we typically employ 50 to 60 employees. We did not now need 50 to 60 employees. How would we share that news with them that we were going to reconfigure our schedules, not to hopefully cut off all their hours, but how do we deal with making it equitable and fair to our customers, to our employees who were there and disappointed on them, what do they do? So it has had a dramatic consequence on our business, but I am absolutely appreciative of the fact that we have 3 ways that we service our customers. We service them through them coming through our front doors every day, which we welcome them with gratitude. We service them through our drive-through. So we've seen an incredible increase in our drive-through business. and also through delivery. So we do that through DoorDash, Uber Eats, and Grubhub, and we have seen an incredible increase with those partners that we've partnered with to get product and food to our customers that we would have normally seen coming through our restaurant doors. There's a lot yet to be done as we prepare for what it looks like when we reopen for carryout and dine-in. So that's the next hurdle that we have to get over. I'm confident that we will. I could not be more appreciative of the patience that our employees have had with us and the generosity and the support that our customers have given us. But it's been rocky, it's been rough, and I think we've come out on the side that is better than what we anticipated.
Cynthia, thank you for sharing that.
Yeah, thank you for sharing that. Just
and helping us with a perspective. And I'm just going to share with our listeners, I apologize, I know we're having a couple technical difficulties, so bear with us today. Thank you for being with us. Cynthia, in some aspects, what is nice about McDonald's is that many customers are used to having that drive-through option, and certainly with the Uber Eats and those resources, that certainly has made a difference as well. One of the questions that's coming in is, we understand you had to make adjustments because a good amount of your business was down because you don't have the dine-in opportunity. One of our listeners, Michael, is really wondering, did you pursue and were you able to get a PPP loan?
Yes, I did pursue it and I was able to get it, yes.
Excellent.
And that process, you know, the process, as we all know, had its ups and downs, but we were able to work with our bank and we were able to get a PPP loan.
Great.
And I agree that that's been extremely helpful because every day we are watching our cash flow. I know that later in our segment, we're going to talk about some best practices, but the importance of watching your cash flow every day is incredibly important. So we actually, every month, we obviously have a budget that we are operating our restaurants under. And now all of a sudden that budget changed significantly. And so how do we continue to manage profitably or to the best of our ability with resources that normally come into our restaurants through our lobby? Now those resources are gone, those customers are gone. They may not all be gone because some of them may be coming through the drive-through, but we know that some of them are gone. So how do you manage now your budget to ensure that you can continue to meet your operating costs? How do you adjust your operating costs? And how do you ensure that you can absolutely give as many hours to your employees that you can? Because our employees, for the most part, are hourly. Our managers are salaried managers, but most of our employees are hourly. And we have, you know, when we peak in terms of our employment, we have about 400 employees. And we would be peaking right now because we're going into the second quarter to the summer months. And that's when we staff up because we know that that's a busy time. We will be looking at the employment practice and the way we handle that a little bit differently. We still do plan to bring employees back, but it'll be a different scenario.
Cynthia, thank you. It's a really helpful perspective as other listeners are trying to think about what they do, what resources are available, what they should be considering. Rick, I'd love to jump back over. The PPP question is a great lead in to what is the Federal Reserve doing right now in terms of providing resources? What are you all doing to help businesses through this time?
Yeah, so that is a great question, Amy. We have been, you can hear me, right?
Yes.
Okay, good. I still see the unmute myself box in front of me. So we have had to be quite flexible, as you can imagine. So, you know, the challenges from a monetary policy perspective really started you know, toward the end of February into March, when we started reducing the federal funds rate by leaps and bounds. So we had an emergency cut of 50 basis points, and then we took it all the way down to 0. And once you get to 0, you've now reached the lower bound. You can't go lower with the federal funds rate. So we really had to look back at some of the tools that we used during the recovery from the Great Recession. So we took some of the lessons from that, because as we got to really about the middle part of March, and actually it was about March 11th, you can almost pinpoint the date, when you started to see some extreme pressures arising in credit markets. So things like the markets for commercial paper and other lending tools came under pressure, and we reinstituted, perhaps with some tweaks, some of the lending facilities that came about during the aftermath of the financial panic and the Great Recession in 2008, 2009. But we also are currently doing other things to support the economy. For example, we have opened the PPP lending facility, so the PPPFL for the Fed. This is whereby we provide liquidity to banks that are making loans through the Small Business Administration. Then, of course, we've got the Main Street lending facilities. This facility was started to kind of support small, but particularly mid-sized businesses who were relatively financially sound heading into this downturn. We started to see some tightening, as I mentioned earlier, of availability right at the time that firms really needed to look into access to credit. So the biggest difference between the PPP lending facility, or the PPP program itself, and the Main Street facility is that the Main Street facility, which we're primarily responsible for, is we're offering full recourse loans. So you recall in the case of the PPP, if you take out a loan, you meet certain criteria, that may become more or less a grant rather than a loan. You don't have to pay that back. With the Main Street lending facility is certainly something that you have to pay back over the course of time. But one of the other things that we're doing is we're communicating with people a lot. So we're coming out, I'm talking to you today. I'm hoping that some of the folks who are listening today will be willing to talk to us to share some information, because we can help you make more informed decisions, and you can help us make more informed decisions.
Rick, thank you for walking through these different pieces. A question's coming in from Mike. He's really wondering, when would you expect to see a reduction in the unemployment numbers truly as a result of the PPP?
That is a good question, and it's a very difficult question to answer, because first of all, we don't know right now we don't know how much the official unemployment rate is understating unemployment. It's highly likely that the unemployment rate is understating that rate, so we should see that go up for a while. But the other thing is, we don't know if every employer who takes out a PPP loan is going to be able to hold on to their employees for the 8-week period of time. For example, I was talking to a staffing services firm just yesterday who indicated to me that she took out the PPP loan. She's using it for the employees that she has, as well as some expenditures, but chances are she's not going to be able to bring back all of the 39 furloughed workers at her firm, and ultimately may be able to pay that back. So that's a very difficult question to answer. I think that we'll only have an answer to that question well past when it actually happens.
Sure, certainly. And, I know PPP has certainly been a blessing, but it has also come with a number of questions and unknowns as well. And there's another question here from Julie. She's wondering, when do we think the official guidelines for PPP forgiveness will be provided by SBA? Do you have any insights or connections there that you know that directly?
Well, let me start that by saying we are on the monetary policy side of the government. The fiscal policy side is handled by somebody else. I have no idea, and I think quite frankly, that's a good question though, and it's a question that's on the minds of a lot of people who are thinking about applying for a PPP loan. We've heard quite a few reports of confusion about what the terms are or will be, which has discouraged some people from actually taking advantage of the program.
Great, Rick, thank you. Appreciate that. And we do have a nice connection with the SBA here locally. And in our follow-up note that we will send out, I will also share some direct links and information that may be able to help listeners on the call, because we know this is an important topic. Excuse me. Another question is, with the infusion of cash, do we expect inflation to increase with such a large stimulus?
Yeah, so that's another good question. So let me start by saying I think the primary concerns that folks have, at least in my world, are not necessarily with inflation, but with disinflationary pressures and perhaps even deflationary pressures. So in the near term, I think that's what's going to keep policymakers occupied. As we move forward, certainly with the level of stimulus that is out there, it may provide kindling for inflation, but you know, the Fed has the tools that it needs to keep inflation in check. And I think what's more important is they have the willpower to make sure that we keep inflation in check, because everybody knows that inflation imposes costs in terms of real economic output on the US economy. So it's something that we will be closely following. But in the near term, I think the bigger concern is disinflation rather than inflation.
Thank you. Appreciate that perspective. At this point, I'd love to bring both Cynthia and Rick here on the screen for more of a conversation as we think about the future. What does the rest of 2020 and 2021 look like? We know this is such a difficult and challenging time to think about what are our plans for our company, what can we anticipate. So Rick and Cynthia, as you're thinking about this, Rick, let's start with you. As in your opinion, what's your outlook for the rest of 2020 and 2021? And what should Cynthia and others be thinking about?
Yeah, I was kind of hoping you would ask Cynthia that question first, because she's the one actually making decisions on hiring, firing, where she's going to deploy capital. But since you tossed it into my court, I'll go ahead and take a stab at answering it. Let me start by saying there's a great deal of uncertainty out there surrounding the outlook, and it's really difficult to tell exactly what it's going to look like. So you have kind of high probability events, low probability events, and then something in between. So as I have been talking to all of my business contacts over the course of the last 6 to 8 weeks or so, I've been asking each of them to give me a sense of what they're expecting, whether they expect kind of this sharp bounce back, a traditional V-shaped recovery, whether they're expecting something more like a U-shaped recovery where we have a steep fall off and then kind of bounce along the bottom for quite a while before rising on the other side, or if they expect something kind of in between, like a check mark or Nike swoosh type recovery. And again, it depends on so many factors, but I think the general consensus that I hear from the people that I talk to, and I tend to agree with the wisdom of the crowd here, is that it's unlikely that we're going to see as a traditional V-shaped recovery. Some businesses may see a V-shaped recovery, but I don't think the economy as a whole is going to do so. And there's several reasons for that. One is, one of the most prominent is because we don't know a whole lot about how the virus is going to play out, how the testing is going to come along, what kind of requirements are going to be made of businesses. So for example, Cynthia mentioned that she has to adjust her business model and how she brings in employees to protect both the employees as well as her customers. Well, that's going on throughout the economy. So you see a lot of sectors. So leisure and hospitality, for example, I don't think anybody's really expecting a big, even a noticeable rebound in leisure and hospitality till at least the end of the summer. So my general sense is that we are going to see this kind of check mark or Nike swoosh, if you will, recovery, where we have a steep fall into the trough and then a long period of time, so a prolonged period where we see growth, where we see output remain below pre-pandemic levels for quite some time.
Thank you. I now definitely have that visual in my mind of the Nike swoosh recovery. So that image is actually quite helpful as we think about the different scenarios, candidly. And I imagine the recovery looks very different depending on the sector, as you have mentioned as well. So speaking of certainly the food industry, would love, Cynthia, from your perspective, as you're hearing the insights and the different economic outlook, what are you considering and what types of plans are you putting into place as you think about the rest of this year and into next year?
This is a different environment. Our business is a B2C business. That's business to customer. Many businesses are B2B. And so it's not as though we can just reach out to our customers and ask them, how's your business doing? How's the economics? How can we be helpful? Because we are a B2C business, which means that we're business to customer, it's more difficult for us to gauge how our customers are going to respond as we try to reopen the economy. So we're very cautious about how we are going to proceed. We don't think that 2020 will take us back to where we were pre-pandemic. We think that we will have to just monitor and see how our customers respond. This virus has changed the trajectory of the way customers and businesses operate on a daily basis. It also has changed the way our customers think about their dining out experience. Where they may come in on a Friday evening with their children to have a Happy Meal, they still may be coming through the drive-through. So our ability to understand the dynamics of what's happening in our business each and every day is really very critical. So the only way that we can gauge the behavior of our employees is to watch their trend and their trajectory. And more importantly, how we're going to make sure that we service them appropriately, and more importantly, how we react to the way they're reacting to us. And so it's going to be a whole new posture of the way we run our business, a whole new posture of the way we greet and welcome our customers back, but it's also going to be me as the owner paying attention to the foot traffic that moves into our business. Different than a B2B. A B2B business is going to be looking at what kind of orders are coming in from your customers. Are they slowing down production? Are they not producing at all? Have your customers put projects on hold? Very different than what we deal with in our business. We're monitoring it by the average transactions we have on a daily basis, the average transactions we have on a monthly basis, and the number of people that come into our restaurants to dine with us versus the percentage of customers that are coming through the drive-through are now just saying, you know what, I'm just going to stay at home. I'm just going to have somebody bring the meal to me. And so we are really watching that. I was just talking to my accountant this morning before this particular webcast, and we were just talking about the trends and the trajectory. And we're fortunate that two of our restaurants are up in sales. They're up in sales, not a lot, but it's a good sign that something is happening. We're not quite sure what. I would hope that is the service that we're giving our clients or our customers, but at the end of the day, we see something happening in this space, and for that, we appreciate it. But we're not going to get so comfortable that we don't realize that this virus is still not over. The prognosis that it could come back sometime in second or third quarter requires all business owners to be on point and be able to pivot based on what happens to this virus as we begin to relax some of our standards of the stay-at-home practice that many of us have been under since mid-March.
Cynthia, I can't help but listen to you and look at the M right behind you. And for some reason, I'm craving those wonderful French fries and a hamburger here during this, this lunch hour. But I am curious, I know many of our listeners are thinking about their personal lives as well and anxious to take their families back out to have a meal. Many restaurant owners are starting to look at this in different ways. Do you mind sharing just a moment or two? Are you thinking about, let's open one store and see what it looks like to have internal dining for a moment, or are you doing all at once? What are your thoughts on how to do that?
Yeah, so great question. So from my perspective and the perspective of our brand, it's safety first. So while we want to open our restaurants, our lobbies for full service, we know that that will come with a great deal of planning. So we have actually began to look what that might look like. We think that initially our restaurants will open up for carryout only, where we will welcome our guests back and we will service them, but through carryout in the lobby only. We will eventually phase that into allowing them to dine in. But because of the social distancing practice that we have to deploy, it will be very important of how we manage how our customers sit in our lobbies. And so we're looking at our lobbies now, what that looks like, how we direct our customers as they come back into the restaurants, how we make sure we have a person that is there to greet them, and to ensure that we are doing all of the things that we should do to make sure that our restaurants are clean, that the handles on our doors are wiped down, all of that. So to answer your question, Amy, there's much preparation that goes into reopening a business that's been closed for almost 9 or 10 weeks. And not only reopening it, but reopening with a whole different set of parameters and guidelines to ensure the safety, as I said, of our employees as well as our customers. So our goal right now is to start off with opening all of our restaurants with carryout, and then eventually phasing each of them in to dine in, to let the customer feel comfortable that when they come in our restaurants, they're safe and they are not in jeopardy of any risk of this particular virus. And we will be doing that to the best of our ability. We've actually even added some positions to our restaurants to ensure that there is always someone there to greet the customer, wipe down door handles. We've always done that, but we will do it with a greater sense of frequency now.
Thank you. That makes a ton of sense. And as a guest, I appreciate your phased approach. I think, you know, anytime you take a phased approach with any business, you learn along the way, and then that sets you up for that greater success. So thank you. That's really helpful. Rick, I'd love for you to add on a little bit of, yes, we're talking B2C as we have this conversation with Cynthia. How about any additional insights for the listeners that are on the call that are in a B2B position?
Yeah, so I think that's a good question. Again, you know, the whole world seems to be adjusting to what we need to do here. So when you think about, for example, an automobile plant does a lot of B2B with its suppliers. And we don't know what the supply chain is going to look like after this, right? We might have a significant changes to where we get goods and services, or how we get them, where we manufacture goods and services. But even when we're providing services, for example, a staffing services firm is going to be providing a service to another business to fill an open position, but at the same time, they're filling a service to an associate who is looking for a job, right? So much like Cynthia, now when they're looking at their own operations, they are trying to figure out things that we never really thought about before. Like, do we have workstations right next to one another, or where we have individuals sit down next to each other to fill out an intake form? Do we allow people to walk in off the streets to apply for another position? So there's all these scenarios that businesses have to work through in the short term and in the long term when it comes to business operations. But of course, a lot of it depends on the demand for their goods and services, right? So, for example, Ohio was a little harder hit by this downturn so far, in large part because of its reliance on manufacturing and in particular transportation equipment. Right, we've got heavy reliance on automobile manufacturers as well as aerospace parts producers. They not only manufacture goods here and they've been hit by the shutdown, but now they've got to look to see on the other side what demand for their product looks like. And when you take a look at the automobile industry, for example, prior to this downturn, I think the industry was expecting to sell and produce about 17 million units. Afterwards, they're looking at selling about 13 million units. So you've got to come back online, but at what capacity? Similarly, when you take a look at the aerospace industry, which is big in the Cincinnati area, right, with GE Aviation here, we've seen declines in air travel that are unbelievable. Air traffic in the United States, passengers screenings from the TSA are down about 95% from where they were a year ago. So how quickly all of that comes back in this new environment where everybody has to do things a little differently is going to be a challenge.
Absolutely. Appreciate you sharing those perspectives, as many businesses are thinking about travel, supply chain, all the different elements that you certainly have mentioned. Love to shift back to Cynthia. A question is coming in from Michael. He's wondering if you're getting any demographic information or guidance from McDonald's corporate. And that's just a good question in general. I imagine there are a lot of businesses that are relying on the associations that they're involved in of, we're in this together, let's share some best practices. We are seeing that competitors, traditional competitors in the past, are now coming together to say, let's help each other. We're all in this together. Let's figure out how to get our economy back up and running. Cynthia, any insights that you're receiving from McDonald's corporate, any guidance that they're providing?
Yeah, McDonald's is really great about providing guidance. While we are, we're franchisees, we actually receive a lot of guidance from them. But at the end of the day, the business every day is run by the franchisee, and that's me as the owner. But to answer the individual's question, yes, lots of playbooks on best practices have been developed. We have a very strong government relations team that is constantly working on the financial aspect and the implications of what this virus has done to our business. So best practices there of how we can enhance any work that the government can provide or any insight that the government can provide. In addition to that, the National Restaurant Association, as well as the Ohio Restaurant Association, has banded together and constantly offering some best practices to business owners regarding how this virus has affected us, but more importantly, how we can rebound and do a restart. So lots of resources have come our way. We have to source through all of them and just really work through how we make those come to life in our restaurants. One of the things that, from a demographic perspective, we see happening is that in some of the more urban areas where restaurants are located, sometimes the restart is a little bit longer just because the resources are not necessarily there in those households to even have a leisurely meal at McDonald's. So we're watching how the demographic of each of our communities across the McDonald's system is reacting to this virus and what implications it may have on sales for our restaurants.
Thank you, Cynthia. I know you've put together a couple bullets of some guidance or just some suggestions or ideas. Did you want to build on any of these to share with the folks that are on the call today?
Yeah, I do. So, you know, I think each business owner that's on a call today has to really sit down and think about what has allowed them to grow their business to where it was pre this crisis. And so what we've done is we've really bucket our best practices in 4 categories, and I'm sure many of the callers have heard these before. We've asked ourselves fundamentally, what impact has this virus had on our customers? And how does that translate to our business? So we've done some demographic studies around where our restaurants operate. We looked at median income. We've tried to even hone down to look at how many individuals within our geographical areas around our restaurants perhaps have been laid off, or what does that look like for them in terms of household income. Important to know where your customers are. And for us, it's a little bit harder just because we, as I said earlier, we're B2C. The next thing we have done is that we are now forecasting our business for not only just 2020, but we have to go beyond 2020 because we know 2020 will still have some hurdles to overcome. We're already forecasting what this might look like in 2021. So I would really encourage our listeners on this call not to just be focused on what's happening today in your business, but what does the outlook really look like for 2021 as well, which will be here in just a few months. We're looking for ways to minimize our operating cost. So how does that work? We have gone through every line item on our P&L statement, and we have asked ourselves, what expenses can we do without? What expenses do we need to modify in order to reach our net income level and be able to retain our employees? Those are hard questions we've had to ask ourselves. So some things we just took for granted because we've always done it. We're asking ourselves fundamentally, do we really need to do this now? And then lastly, we ask ourselves, what are we doing to ensure that we show and demonstrate to our employees every single day that we value them as they work through how they're surviving in their individual homes through this crisis? We have a workforce that is a moderate workforce. And sometimes there are many, many people that work for us that are single head of households. This virus has hit them in an incredible way. So we know that our business would not have been as successful as it was pre this crisis without the people who walk in our restaurants every day and put on their uniform and do their job. We have to remember the dedication that they had to us, and everything we do with them in mind. So that it's not just about our family running our business, it's about every single family that we employ, and how can we make sure that when we come out of this, that they're okay. And so everything about this, because we can't run this business by ourselves, we need the 400 people to help us every day to take care of our customers. And we will never forget that. So I just want to make sure that as I go through these last few items, that it's really important to remember them. And I think probably most people on this call would be doing that as well.
Cynthia, I love that. There are a couple pieces in here. Yes, I would say everyone's thinking about cash flow and how do you minimize expenses. But what I love that you're highlighting for all of us is let's think about others right now. And we know that's actually really making a difference for consumers. Consumers are interested in companies that care about others right now and that are there to help. And what I mean by that is I absolutely love that you're trying to put yourself in the shoes of those folks that are driving through right now and that are eating McDonald's on a regular basis, and to take care of your employees. It is a tough time, and just to be empathetic and real and authentic and understanding of people's situations is just critical. and absolutely could not highlight that more. And thank you for your leadership there. Cynthia, a final question came in, and I know we are up against time, but quick response to Mike, who's wondering that when carryout begins, will you require that guests coming in wear a mask as they come into the lobby?
Great question. So there's been a lot of conversation about whether a guest should wear a mask or not wear a mask. Right now, we are leaning toward asking our guests to wear a mask. We have not really confirmed that because initially the governor was indicating that people should wear masks. He's now relaxed that to some extent and given the business owner the option. We will have masks available as our restaurants open and to put them on. We have also put shields up in our restaurants that give some barrier between the customer and the employee, which helps to mitigate any particles or anything else moving back and forth between that front counter. We will have masks that we will offer our guests when they come into the restaurants. If they refuse to put on a mask, we can't force them to, but we will have them available for them to put on.
Thank you. That's really great to hear. And I know just this morning we were having a leadership conversation at the chamber around the importance of masks and really encouraging people that this will help our economy come back faster if we take the time to wear masks and encourage others to wear masks. So appreciate how you will make those available to your guests. I just want to take a moment to say thanks again to Rick and to Cynthia for joining us on this great conversation. Truly helpful insights as we think about the economic outlook and how you're handling your business on a day-to-day right now and how you're planning for the future. So thank you again, both Rick and Cynthia, for your time today and sharing your expertise. I'm also thrilled to say thanks to Fifth Third Bank. Truly, truly appreciate your investment in this platform and continuing to educate and inspire through a virtual webinar and roundtable series. So thank you, Fifth Third. Thanks for our members and thanks for our future members. Please know that the Chamber is here to help you through this time and certainly into the future. We hope you will join us in the coming weeks with a couple of different options to continue on your leadership journey through this unique time. Those are listed here on the screen, and we will certainly send those out in a note to follow as well. Thank you from everyone at the Cincinnati USA Regional Chamber. We really wish you, your team, and your families well wishes during this time. We truly do encourage you to stay safe, respect social distancing, wear those masks. And as we sign off today, please go wash your hands one more time. Thanks again for being with us. Take care.